Hi traders, and welcome to Leading and Lagging Indicators webinar. As always, price action training school, Wednesday, each Wednesday. Sometimes due to some seminars and other obligations, we skip Wednesdays, but usually each Wednesday, same time, we have our price action training school version 2. And today it's session number 16. So we are going to be talking about leading and lagging indicators. Okay, so before I start, have in mind that everything you see here is my personal opinion only. And of course, forex trading carries a high amount of risk. So please inform yourselves about the risk before you start with forex trading. Today's agenda: forex indicators, classification, leading and lagging indicators. So we are going to be talking about general what are forex indicators, why do we use them, what is classification, and how a proper system like my Camerla MACD should have all these indicators put into one template. Because whatever is not simple, it's not good. We always like to keep it simple. Okay, so forex indicators. Forex indicator is basically something that tells us something. So that is the most basic definition. An indicator is something that tells us something. In forex trading, the indicator informs us about price action, about potential moves of the market, and of course about potential entries and exits. Indicators can also give us trend direction, but also can inform us about potential counter trend moves. Forex indicator is a mirror of price action. That is very important for you to understand when I say a mirror of price action, because guys, if you trade the price, you know that indicator will either follow a price, it will either follow the price like real time, or it will lag behind the price. But all indicators, no matter if they're leading or lagging indicators, are basically a mathematical calculations based on a price. So there is some calculation that is put in a price, and all those indicators tend actually to derive the calculation that is based on some algorithms and formulas. Also, indicator in forex use statistics that measure current conditions and that are used to forecast financial or economic trends. Simply put, we traders use indicators to give us cues about trend, momentum, and direction. When I say momentum, trend, direction, and of course divergence, I always think about entry, stop loss, target price, okay, and potential exit for scaling out of trades. It's very important for you to understand the primary logic of momentum in forex market, because guys, I know that all of you mostly trade. I mean, not all of you, of course, but majority of you like to trade intraday and intra-week trades. Those trades that you make during one day or during the week, and let's say hold on for a trade for 1 hour, 2 hours, 1 day, 2 or 3 days, basically gives us that kind of trading gives us active trading. So we are active traders. In contrary to traders who like to trade on daily and weekly, sometimes maybe monthly charts, in my opinion, daily chart is the highest chart if you want to trade. If you want to invest, then you trade, then you basically put buy and sell orders on weekly and monthly chart. It's called investing, but trading is something different. For successful trading on intraday and on intra-week time frames like 1 hour and 4 hours, especially 1 hour, guys, you need to know about momentum. So momentum is something that is not always present in the market. To some extent it is, because when we say when there is no momentum, market is flat. So, or if it's a low momentum, market is not going anywhere. For intraday, successful intraday trades, we need to have momentum. When I say successful trades, I'm not thinking particularly about profitable trades. I think about the trade that will either go to target or to stop loss. Because when there is no momentum, your trade will not go anywhere. It will not go towards your target nor towards your stop loss. And basically you are stuck in a trade. And I mean, it can happen, but if it happens, it means that we actually miscalculated that momentum in the market exists. And on the contrary, in that moment, when price is not doing anything, market momentum does not exist. So it's extremely important that for intraday trades, we need to have momentum in market. Otherwise, our target, our stop won't get hit, and we might end in a stuck trade. Okay. Next thing that is also very, very important is the main purpose of using indicators. Again, for all of you who join later, I see that people are still coming in, to define a trend, to confirm trend and entry, to place stop loss and target, to help us with managing the trade. It's important, guys, scaling out, and to give us more confidence in a trade. Because mostly when I trade and how I teach my group on ECS live service and my Telegram group how to trade is to basically scale out, or at least if we are 20-30 pips in profit and we trade with bigger lots, we can actually exit the trade. We don't need to scale out all the time. I do it, but it's not like it's a must. For me, it's always good to take at least 20 pips, and then we can choose to scale out, or we can choose to close the trade, or we can actually choose to put the whole trade to break even +1. There are different management techniques, but indicators tell us what we actually might do. Without indicators, trading naked in 2019, it's, guys, pointless. Naked trading simply, in my opinion, cannot bring you anything except if you want to invest, and then you watch the chart naked and put some investment into the market, like trading, like investing into weekly or monthly chart. But trading actively requires lower time frames. I'm specifically talking about 1 hour time frame. That is my favorite time frame for trading, and of course, a market momentum. Indicator types. There are, as I already said, leading and lagging indicators. Those are two main groups of the indicators. But then again, we have some other stuff such as dynamic and static support and resistance levels. So leading indicators are CCI, that is also an entry indicator, RSI, stochastic. Those are main leading indicators. There are tons, guys, of indicators, really tons of indicators. But I'm specifically talking about some popular types that can be found by default on the MT4 and MT5 platforms. So leading indicators follow the price real time. The other name for leading indicator is an oscillator. So leading indicators are actually oscillators, okay? While lagging indicators are momentum indicators, such as MACD, moving average, momentum. The indicator name momentum, there is an indicator name momentum by default on the MT4 platform. Then Bollinger Bands, on balance volume, those are basically lagging indicators because they lag behind the price, but their main purpose is to capture the trend. Okay, guys, so think about it. We have leading indicator that we use for entry, but entry needs to be confirmed by lagging indicator, right? And lagging indicator are momentum indicator that are lagging behind the price, but they have already captured the trend, so we use combination of leading and lagging to enter the market in a trend direction. And we have dynamic and static support resistance level indicators. such as simple SMA, exponential EMA, smoothing SMMA. Those are all these moving averages can be dynamic support and resistance levels, as my 89 EMA is. It's a dynamic support and resistance level. And we have, of course, Bollinger Bands, very important dynamic support and resistance level indicator. Finally, we have static indicators such as Camarilla and classic pivot point, but those are static indicators that can just tell us whether we should scale out or whether we should take the profit, full take profit, and so on. Combination of one type of all of these indicators should give you a good method or a good system to trade. My Camarilla MACD uses in a simple template. It has everything aligned to be a successful method. The cluster is not, the chart is not over clustered, and it has basically all inside it: momentum, trend, direction, and of course entries based on dynamic levels of support resistance such as EMA, and of course Bollinger Band. For Camarilla, it's important that we cannot talk now about Camarilla, but it's, for all of you, it's important that Camarilla is extremely precise in defining the trend and targets along with potential stop losses. Okay, now leading indicators are strongest during periods of sideways non-trending periods. Should be following the trend. All of the leading indicators should follow the trend and follow the price real time. They will, and they usually are well known to create many buy-sell signals. So that is why you cannot just simply rely on one potential signal, right? You cannot rely on one potential signal caused by, let's say, a leading indicator or a lagging indicator, because that signal will not be correct. You need to have a combination of leading indicator, okay, lagging indicator, and dynamic static pivot point, dynamic support resistance level indicator. If you only use leading indicators, you will have a lot of signals that can be whipsawed, like you buy, you sell, and simply you lose the string and you don't know what to do. You don't know whether you should buy, whether you should sell, what's going on. So you cannot just use one indicator and say, okay, it's fine. Majority of leading indicators are oscillators. And what are oscillators? Those are indicators that are plotted within a bounded range. On the contrary, guys, sorry, I have, lagging indicators. One of my favorite lagging indicators is MACD indicator. Okay, MACD indicator, I started using after I read the book from William Blow. It's called Momentum Direction Divergence. And I read it some 10 years ago. And since then, I have only been using MACD indicator as a lagging indicator. There are, guys, different indicators, such as Awesome Oscillator, Ultimate, I mean, dozens, tons of those lagging indicators. But my favorite lagging indicator is MACD. Contrary to many opinions, RSI indicator is not a lagging indicator. RSI is leading indicator. So we cannot put it in the same form as MACD. So for MACD, we use our Elliott CurrenSea CS MACD. And when we see, and this is just general how we might use and how you can use the MACD indicator. Uptrend are both lines above zero line, and we have these thick, solid histograms. So this defines uptrend. Okay, this is important, guys. So uptrend is when both lines are above zero line, and we have thick, solid histograms. Downtrend by the MACD is defined when you see both lines below zero line, and we have thick red histograms. solid, you see, thick, solid histograms. So that is a downtrend. Okay. When we see both lines above zero line and thinning lines, it means that momentum, guys, is weakening in the market. So this is the sign of retracement. Okay. Also, if we see that both lines above zero line, but we have red histograms thinning, it also indicates retracement and potential resume of the move that has already been confirmed with a trend. For a downtrend, guys, it's easy to define. Both lines below zero line. If the market starts to make thinning lines, it means that there is retracement. Blue histograms, while still below zero line, but while those two lines are still below zero lines, indicate a potential end of retracement and continuation of a down move. So in one single indicator, we can find both trend cues, momentum cues, and, as David says, divergence cues. Divergence is also important, guys, because we use divergence to actually measure a potential reversal or a continuation move in market. Also, divergence is used for confirming counter trend trades. That is what I have with my CTT counter trend template, and I plan to revise it completely very, very soon to be in a match with my Camarilla MACD MTF. And this is, for example, guys, how it looks. Maybe I will show you right now on, okay, doesn't matter. So this is basically what we have, our MACD indicator. So basically, guys, this is the analysis template. And here is my Camarilla MACD MTF template. So all of these circles, all of these blue diamonds are potential entries in the market. But based on Camarilla levels and levels of support to resistance, you need to assess each signal from a system, your system, any system, from a trader's perspective. You cannot simply blindly following those entries, because the system will always give you entry based on calculation that I mentioned in the beginning of the webinar. But you need to see where those entries are related to pivot points. That is how I also define potential entries. I always want to see and take a look where the entry is. Okay, we had an entry signal here, 111.75. It was good. We made money with it yesterday, right? But you see, or no, we took this one. Sorry, guys. It was good. Okay, not much. 43 pips. ATR, that is average true range, is 53 pips. So it almost went to a full ATR. Today, you see the price only moved like 12, 13 pips, and now it's some sort of ranging move. But where was it at the time when signal was received? It was at the daily L3. It was at above weekly L3 on 4-hour time frame, guys. It was below. It was between weekly and monthly L3. So for long trades, this was telling me that we might have a successful entry, because I wouldn't go long if the price was actually very close to this, let's say, weekly H3 or weekly H4. Because if we traded the price when it was close to weekly H3, we would have been buying into resistance. Or if the price got here also close to these levels, we are not trading, guys, because then you don't have much room till next resistance. Also, if I see that the price has come here and that I see the signal from my system, I don't go long at weekly H5, because that is the lowest possible, the highest possible weekly resistance. So I'm usually staying away. Let's see, guys. Euro, for example, or dollar. Some potential trades at a spot, okay, and then the move continued. You see, all of these are potential trades. But now, for example, I would sell it. Why not? Because here we have the price that is already retesting this order block. It's going below weekly L4, and according to Camarilla floor trading, if the price has broken weekly L4, it has the room to weekly L5, because that is a breakout spot for Camarillas. So I would sell here, but I would never ever sell here 1269. Although I'm not saying that it cannot give me some pips, right? But I would definitely stay away from this because I have a lot of support here. Bollinger Band, ATR, weekly L5. And if I see a signal from my system to short euro dollar here, I would skip it, guys. So yes, this is 4-hour time frame. So this is, guys, why I'm saying that every signal you should assess from a trader's perspective. You cannot believe each and every signal from your system. You need to assess it from a trader's perspective, guys. GBP Swissy, we had a one trade. My live room had one trade today. Okay, this was the signal. Some news kick in, the price dropped. But what we did, guys, we actually protected 20 pips, close to 20 pips on the GBP Swissy. Because when you see that the price is going close to some pivot point, like this ATR pivot point, or it's making static resistance like this, guys, always put horizontal line. There is also a level of support and resistance. This is static resistance. You see, 1, 2, 3, 4, 5, almost 5 touches of this important resistance. We just scale out, guys. That is why I'm saying you need to definitely assess each signal from a trader's perspective. So we took some 20 pips with scaling out. I said, okay, go long here, scale out there, because I saw that the price is not going anywhere. It's basically hitting these horizontal levels of support, of resistance. So my advice to you is also, guys, use the indicators, but also use that manual drone indicators such as horizontal, I call them red levels, horizontal red levels of support and resistance. Go to higher time frames and put those red lines at important swing points. And you will usually notice how the price reacts nicely on these levels. 1 hour time frame also. If you see that the price is making double bottom, triple bottom, double top, triple top, just put a line there and see how it performs. You see? Now, if this candle actually spikes, then we will be still in a range. If this candle goes down, closes below the level on 1 hour time frame, the price will probably go down. That is why those indicators actually help you to define potential reversal spot or reversal move in the market. Yeah, there was a gap, but this was closed. So guys, I hope that you enjoyed the webinar. Just to let you know, good system for trading is nothing if your money management is not good and if you actually don't follow your system religiously. Not in the sense each signal, but the rules that I mentioned. You need to assess each signal from a trader's perspective and see if you should take or avoid the signal. That is why we use these levels of support and resistance to tell us if the price is really oversold, so you don't sell, or overbought, so you don't buy. And thank you for comments, David. David is saying that Camarilla MACD is the best system. Yeah, guys, for me it is the best. I will just tell you that I also have my FX book account. I still haven't updated it because there is a big gap in forex trading and gold trading. For example, if you make 10 pips on gold or lose 10 pips on gold, my FX book would calculate it as 1,000 pips. And my result was very, very good, but it showed like minus 3,000 pips. It's not normal. And I will open my FX book account again very soon and place my Camarilla MACD trades that I do on my Telegram live channel group, of course, without trading gold on that account. And for all of you guys who are watching this video on YouTube, you can always ask for results. We have full spreadsheet of results that also our traders check. So it's fully up to date, it's fully legal, it's relevant, and you can definitely see result how we traded and what we did with our ECS live Telegram group. So one question before we close it: why we didn't receive signal on GBP dollar in the beginning of the hour? Let's see the GBP dollar. I will tell you right away why. I don't see any signal here. Yeah, we are fully transparent, indeed. As you say, David, we are fully transparent. Let me just check one more. Yeah, I didn't see the signal here, actually. You see, there wasn't a signal here. That was a T89, let's say, close, but I didn't receive the signal from my method. I need to have a clear signal or arrow. And probably some conditions haven't been met. Let me open here. I think I have. Just give me a few seconds. I will let you know right away. Okay. Yeah, this is why we didn't receive signal. This is, guys, just for Camarilla MACD traders. You see, blue is above red on daily time frame. So daily time frame should be aligned with 4 hour. So red should be above blue on daily too. That is why we didn't receive the signal. You see, Marius. Yeah, but see, guys, the moving averages. This is important, guys. This is how we do it and how I do it. Always strict to the rules. You see, moving averages on Camarilla MACD should be aligned on daily and 4 hour time frame. Daily is not aligned. Blue is above red, while 4 hour red above blue. If daily had red above blue, then we would have entered 1 hour trade because it would have printed out the signal. So that's it. You see, that was it. That is why we haven't received a signal here on this template, or on this pair, GBP dollar. Only that was the reason. Okay, guys. So yeah, always follow the rules. You see, combination of moving averages, middle Bollinger Band, and higher time frames. Everything, guys, is coded here on this ECS arrow indicator. And the chart is not clustered. It's very easy to follow. And that is how a successful system, of course, should look like. Thank you, guys, for listening. Thank you for your questions and comments. Thank you, of course, for your time and everything. See you soon, guys, with free webinars and, of course, signals on my trading ideas on my live Telegram group. Thank you. Cheers, guys. And as always, trade safe. Thanks, everyone.